to this week's risk events video for the week beginning May the 11th, 2015. What we're going to be focused on this week, particularly Wednesday, it's all about Wednesday, May the 13th. The biggest risk event of the week is occurring from the UK. We've got two key events happening in the UK. Now, the reason it's so important, or doubly important, is because the UK elections are now over. Not only that, but the result of the elections was really positive for the pound. The Conservative government got in, which is seen as a very business-friendly government. The one thing now that could concern the markets over the coming months is this speculation of a referendum on whether or not Britain should be in the European Union. Okay, that's the one snag that could concern markets over the next year or two. However, right now, we're not expecting that to be a major concern in the markets at this moment in time because the referendum is not expected for over a year yet. There's been no announcement, no plans for a referendum, but that is something you want to keep your eye on because it probably will happen. Now, the other reason is because we've got some key data points or key events that are going to be very defining in terms of when the Bank of England are going to hike their rate, okay, or not. So, first thing is average earnings index. The average earnings index has been a key metric of the Bank of England to decide whether or not they're going to hike. It's fairly solid. It's been fairly solid over the last few months. I had a couple of negative months recently, but overall, over the last 6 to 12 months, average earnings has generally been quite solid, which is pretty positive. The second thing, we can see this one comes out first thing, 9:30 a.m. On the Wednesday, London session, just after the London session starts. This is big because if it's positive, if it's 1.7 or above, we could see the pound supported, okay? But this data point alone won't drive the pound through the session because the next event is probably a little bit more important. We've got the Bank of England Governor Mark Carney speaking, and he's also releasing the Bank of England inflation report. Now, what will this say? Will the Bank of England retain their tone, or will they change their tone to something more negative or even something more positive? So will they go more dovish or will they go more hawkish, or will they stay as they were? Now, at the moment, they're fairly hawkish because they've stated that the next move is definitely going to be a hike. They also said that they expect inflation to pick up through the summer of 2015. So basically, from now until August, we need to see CPI, UK CPI picking up if this is actually true and if the Bank of England are correct. If we don't see that, Bank of England could be in a tricky spot and might have to put off or delay their rate hike. If we do, we could see, obviously, pound strengthen dramatically as increased speculation develops on that the Bank of England are going to hike ASAP. So why is this inflation report important? Because it's going to give us an outlook of what the Bank of England are thinking in terms of UK inflation. Are they still confident that the inflation rate is going to go up, tick higher, or have they lost a little bit of confidence after recent data points and the impact of oil, the drop in oil that we had over recent months, etc.? That's the big question. This session event will answer that question and give us some possible future direction on the pound. If it's vague and kind of the same, we might not see much, but if they become a little bit more hawkish, that could really be supportive of the pound, especially coming off the back of the UK election being so positive for the pound. All these things could start adding together and we could see a nice rally developing on the pound. Of course, we need to wait and see what happens with these things. Average earnings index and the inflation report and Carney's speech, all very important. Not risk events we're trading into, but definitely risk events we could possibly trade out of if we get all those things coming together and the Bank of England confident in what they're doing. Okay, so that's the big risk event of the week. That's